The price of major cryptocurrencies soared on Wednesday after the Federal Reserve announced that it will accelerate the tapering of its asset purchases, with the program set to expire in March, and that the benchmark interest rate would be raised 3 times next year. Following the Fed's announcement, Bitcoin soared from roughly $47,800 to over $49,350. The cryptocurrency is currently worth $49,080, up 2% in the last 24 hours. Ethereum was at above $4,000 at press time. The crypto market may have already factored in the Fed's decision to accelerate tapering. Bitcoin has lost more than a quarter of its value since hitting an all-time high of $68,991 in November. Ether has dropped more than 15% from its all-time high of $4,865. 6. Major cryptocurrencies were likely to surge if the Fed was less aggressive than the market predicted, according to several traders. We've been in a risk-off environment in Bitcoin and the crypto asset broadly over the last month, LaValle, managing director at crypto fund manager 3 at Digital Assets, said. If the FOMC, Federal Open Market Committee, meeting doesn't make blockbuster headlines, that could be a buying opportunity for those on the sidelines. Powell stated in November that the Fed will start to reduce the pace of asset purchases, prompting many to believe that an interest rate hike will. President Biden recently renominated Federal Reserve Chair Jerome Powell for a second term-related article. New COVID variant flood drives Bitcoin down to $54,000. The reverse of quantitative easing programs, such as asset purchases and so-called money printing, is known as tapering. Each month, the Fed buys $40 billion in US Agency Securities and $80 billion in US Treasury Securities. Stock prices have fallen as a result of the anxieties, as tapering tactics are known to trigger economic downturns. According to today's Fed statement, the interest rate will continue around zero until complete employment recovery to pre-COVID levels is achieved. With new instances of the Omicron Covid variant reaching record highs in both the United States and the United Kingdom today, this is unlikely to happen anytime soon. Many investors consider the largest cryptocurrency by market cap to be a hedge against inflation, owing to the belief that its supply The Federal Reserve's human-decided monetary policies, which have inflated its balance sheet to approximately $8.7 trillion, more than double where it was in early 2020, contrast with that hard-coded procedure. However, because Bitcoin is seen as a hazardous asset, traders believe that loose monetary policies encourage investors to make larger speculative wagers. A shift away from these dovish policies could be a drag on Bitcoin. It's also unclear whether an unusually high number of COVID-19 cases will frighten financial markets, and if so, whether a Bitcoin bloodbath will follow suit, as it did in March 2020.